Over the past few years that I've been running this channel, I often been asked the question, how can a beginner start making money on binary options? I always hesitate to answer because there's simply no easy answer to this. Like, trade using MACD and EMA strategy and you will earn $1 million. And everyone think that with a good strategy, they will immediately start earning, but in fact, strategy is just 1 out of 5 steps leading to success. So in this video, based on my experience and experience of all successful students from the academy, I will try to answer the biggest question: how do I become a profitable trader? Let's get started. The first and most important step is, of course, the development of a clear trading strategy. Because even if you follow all the other steps without having at least 55% win rate on your strategy, it's almost impossible to become a profitable trader. And a good binary option strategy is essentially a set of rules that you need to follow when you're trading. And among them, we can list the number one, defining entry conditions. Clearly define under what conditions you will open a trade. For example, a signal from MACD in combination with the formation of certain candle pattern or when the price reaches a certain level. Another one is expiration time selection. Decide for what period you will open trades: 1 minute, 5 minutes, 1 hour, etc. For the last 2 years, I have focused on 3-minute expiration time and almost always use it. But this doesn't mean that 3 minutes is the best choice. It just basically fits my aggressive and fast trading style. And another one is a time frame and a trading time. Determine which time frames you will analyze on the market. For the most part, it depends on your expiration, and in my case, the 1 minute time frame suits me the best. Let's talk about how each list of the rules for each strategy should look with an example of simple strategy support and resistance. Let's imagine that you are working with 3-minute expiration with 1 minute time frame. So with a currency pair, you should see on 1 minute time frame following picture. You should find a support or resistance line level, and on that level, when the price is moving closer to it, you should get the signal from the candlesticks and additionally from stochastics. So let's look at the chart. Right here we see that there is the support level and the price moved from it one time. Previously it also worked before right here, but it's like an old data. We are not interested in that. We are focusing on the picture right now. We have 1, 2, 3, 4 touches of the level, and this is the 5th time when the price touched this level, and at this moment it can go through it or get back up again. But we are of course expecting the price to get back up again, and we need to see what's going to happen next to the price. And let's see. So you can definitely tell that we have following picture. We have the dodgy candlestick, and after it we have the green candlestick. Of course, it's not like giving us the opportunity to enter a deal because we have big shadows on that candlestick, but the next one is a great pattern with stochastic. We can definitely tell that this is a support level, and on this level the price is reacting to the level. The dodgy candlestick shows us indecision, and the next candlestick is quite big and green. We don't trust it because of the shadows, but the next one, the bull's hammer, giving us the signal. And also we have the crossover of stochastic in the oversold areas. And right here, with all the confirmation that we have, we can enter into a deal for 3 minutes. And of course, let's see what's going to happen in 3 minutes. And we are getting our money because the price is moving upwards. The second step is effective risk management and money management. Unfortunately, there are no strategies with a 100% win rate. So even with the best strategy, you can lose all of your deposit if you do not control the risks. And the basic rules of the risk management on binary options are: do not risk more than 1 to 2% of the deposit in one transaction. For example, with a deposit of $1,000, invest no more than $10 to $20 in one transaction. Set a daily loss and profit limit. If you have reached this limit, stop trading for a day to avoid emotional decisions. And if you use martingale, you control the risks especially carefully, because martingale, if you don't know, implies doubling the amount of the transaction in case of loss. Due to this, you get a situation where in order to make profit, you need to win not one specific transaction, but actually, for example, like 1 out of 3. On one hand, this increases the chances of winning, but on the other hand, the risks of losing a significant part of your deposit increase by many times. Martingale can be a useful tool, as you know. Me, myself, and I use it quite frequently. But at the same time, your first transaction should be for the minimum amount, and you should immediately set a limit in advance of the steps, how many steps you can reach and stop in case of failure. Personally, I only use one martingale step, and in extremely rare cases, I use 2 of them. And by the way, on Quotex, we have a really good feature. We can use not the specific amount of money, so you don't have to count. You can click switch and put percentages that you want to use. So usually, as you know, I use 2% at the beginning. In case of a loss, I up it until 4%. And with my deposit, for example, like 6,753, the first one is going to be $245, and if I lose the money, 4% is going to be $491. By the way, there is a separate video in my course dedicated to risk management, as I'm convinced that this is one of the most important topics. So if you want to get access to this and other exclusive videos from the binary options market analysis course, you can join my free academy. Just text me on my Telegram, and by the end of the course you will receive constant support from me and your supervisor. The link is, as always, in the description box down below. The third step is to control emotions, because they can seriously affect your trading decisions and lead to a loss of your money. To prevent a revenge trading, you need to first of all follow the plan. Do not deviate from the strategy due to emotional impulses, even if previous trades were profitable or unprofitable. Another one, take breaks. If you feel stressed or tired, you need to stop trading and rest. And one more rule, do not try to recoup. After a loss, do not increase the amount of transactions if your money management strategy doesn't say so. I recently had the series of 5 losing trades in a row, and with my deposit and taking into account martingale, I lost about $1,500. But instead of panicking, I stopped, analyzed the market, and realized that the market conditions did not fit my strategy at all. I decided to take a break and return to trading later when the situation becomes more favorable. As a result, the day closed for me with a loss only of $200, and if I hadn't stopped, it's likely that I would have lost a lot more than that. The fourth step is continuous learning. Binary options market is dynamic, and it's important to be aware of the latest strategies and analysis methods. You're probably asking how to study this information efficiently, and I will gladly answer that question. Read books and articles. There is not much literature on binary options yet, but you should understand that binary options are essentially bets on forex, stocks, and cryptocurrencies. So you can read information about these markets and adapt to our aggressive trading style. Another one, watch the tutorial videos. They help to better understand complex concepts and see their application in practice. And don't forget to subscribe to my channel and like this video if it is useful for you. And if it's not useful, put a dislike and definitely leave a comment down below on how to do it better, because I want to make the highest quality content, so I'm happy to receive any constructive criticism. And another rule is communicating with other traders. This is a great opportunity to ask experts questions, get fresh ideas, or many more things. You can chat with friends, join chats, or join my academy, but this step definitely should not be neglected, since I personally am sure that I was able to succeed and achieve some sort of success, partially thanks to the right community. The fifth step is market analysis. The ability to analyze the market correctly is the basis for making informed decisions in binary options. Many people associate this step with the strategy, but as for me, it's not quite right. The strategy tells you under what conditions to open a deal, and reading the market gives you an understanding of when each particular deal has a greater or lesser chance of closing in plus. And we also have already analyzed the market analysis in many videos on my channel, but if we summarize, the analysis is basically a search for clues to help determine the current mood in the market using patterns and levels. Let's imagine that we are a breakout trader. So we need to find the trend and the point where the trend is going to do a reversal. It doesn't matter which strategy you choose, a breakout or maybe continuation strategy. First things first, you still need to find the trend line. Right here we can definitely see it connecting our swing low and our lower highs, two of them. And of course now we're expecting what's going to happen to the price, not expecting, we're waiting. Of course right now we cannot make any decisions, we need to know what's going to happen, and we see that the price actually broke through that level. But before that we have two dodgy candlesticks. It's a small candlestick with two big shadows or slash tails. So that tells us that there is indecision on the market for 2 minutes, and sellers and buyers are putting like similar pressure on the market. And then we see the big red candlestick, and that tells us that bears actually won. And this is not just they won, this is a momentum candlestick, and there is a big impulse downwards. And stochastic gives us the signals for a deal, for a downtrend. And what else? That basically is enough for us to work with the breakout strategy. Okay, so what is important for us to understand? In general, from the point of view of strategy, we already have the signal for a downward trend, but what does the analysis give us? It gives us the bigger picture. If we want to analyze the whole picture, we need to move backwards a little bit and see what happened in the past. Here we see that the price moved upwards, moved downwards, upwards, blah, 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 blah. And basically there was a big drop after that. And that means that this zone is our resistance zone. And this right here, this dot, this is the swing low. And it's important to understand that this uptrend happened inside of this downtrend, right? And that means that this structure is called inside structure. And you need to understand that with inside structures, they do not have a big meaning. This uptrend, this is just a collection of liquidity for the future downtrend. And right now we understand that it's not just the signal that strategy gives us. This is a great signal that was powered by our analysis of the market. We have different situations where we can use it. In cases like this, when it gives us more power, some traders actually thinking about getting more money invested into a trade. That's up to you. I personally do that rarely, but with the risk management point of view, that's not really good. But you decide what you want to do. Don't forget to try it on the demo account first. But sometimes your analysis will be against your strategy, and in those cases you definitely should not enter into a deal. That's why market analysis helps you to collect all the information that you need to have. And if the strategy sometimes gives you like 65-70% of win rate, then the great analysis helps you choosing the better points of view, and it helps you to get additional 5-10% of win rate for your strategy, and that's a really good profit for you. And in this case, let's see what's going to happen. Of course, the price is dropping and we would get our money because we analyzed the market correctly, because the structure was not really important, and it's the pattern called flag. So we have analyzed the 5 5 key steps to successful binary option trading: developing a clear strategy, effective risk management, control over your emotions, continuous learning, and good market analysis. By applying these steps, you can improve your results and get closer to your financial goals. Remember that success in trading requires time, discipline, and constant development. And the main thing is not to give up and keep going forwards. And if you want to learn more about my strategy and my rules for entering a deal, click on this video right here. And that's going to be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.